a real estate and finance expert that goes to bat for you every day as a consumer advocate. Your host and the consumer quarterback, Brandon Rhymes.
All right, here we go again. Another day helping you win in any marketplace. Your local consumer advocate here in Tampa Bay. Great lineup for you on the program today. Financial firms flee New York City in record numbers. We're going to talk about migration trends with Tom Rydberg, DK Mortgage, our mortgage expert contributor on the Consumer Quarterback Show. Also, later on the program, Sean Fabre, entrepreneur, podcaster, and Fabre Frameworks. He's the owner, one of the owners of Fabre Frameworks is here as well. I'm going to talk about Kevin Sorbo makes some really interesting comments. Great American Kevin Sorbo. He's an actor and director and author. Comments on the importance of fathers in the household and the attack on the patriarchy. So we're going to dive into some of our national stories like we always do, but we always like to stay local here with our expert contributors. Please support the local economy by supporting the Consumer Quarterback Show. Now more than ever, we need help here. We need help. The market's down. The economy's tough. So we need you to refer buyers, sellers, investors, all types of different folks to our show and to our real estate business. It would mean the world to us. We'd really appreciate that. Reach out to the hotline, 727-263-3707. Support the local economy here, 727-263-3707. And we would love for you to check out our site, platinumcoastalelite.com for the real estate business, Platinum Coastal Elite, and consumerqb.com for our radio and TV show. Over 10 years on air now, helping sellers, buyers, investors, and also being that consumer advocate in the Tampa Bay market. All right, we always feature our listings. Here we go. A couple of hot listings here from the Platinum MVP team. Keller Williams Realty. We got a beautiful property, great opportunity here. In this one's out of state, North Carolina, 530 Heaton Forest Road. We've got a $10 million listing, compliments of the Bill DeVore real estate team. Kind of partnered up with him in the Carolinas. Bill DeVore real estate team, KW Professionals, 11 bedrooms, 10 bathrooms, 10,000 square feet. A great estate style mansion on 20 plus acres, 530 Heaton Forest Road, Cashiers, North Carolina. If you know anybody looking for a beautiful estate-style home in the mountains of the Carolinas, reach out. We'd love to talk to you about that one. We also have a property in Orlando, Pebble Creek Court. This is Orlando, just outside of Orlando, about 10 minutes from downtown Disney, 10 minutes from Universal, downtown Orlando as well, SeaWorld. 100-plus acres for sale at Pebble Creek Court, Four Corners, Florida. Orange and Osceola County. This is a $13 million listing. So you want to buy some dirt, do some development, we got you. We got over 60 current listings as well here in Tampa Bay. So reach out to the show. We'd love to connect. And you can see all of our listings online at platinumcoastalelite.com.
Try that in a small town. See how far you make it down the road.
All right. Tom Rydberg, welcome back, sir.
Hey, good to see you.
Awesome, man. Likewise. Yeah. So, hey, it's always a fluid market. There's, things are changing. The interest rates. You got insurance is a major challenge in the state of Florida, but it's not all doom and gloom. Deals are still getting done. People are moving to Florida. Record numbers still.
For sure, yeah. And none of those things always move in one direction, right? So it's always you see ebbs and flows, ups and downs. Definitely a little slower this summer than last summer. But I do suspect that that's going to change in the next couple of months once people start rolling back into town and starting to see rates come down. So I think that is always a good indicator for more activity as well. So hopefully that trend of lower rates starts to kick in and be a little bit more consistent.
Yeah, we really need that, and we need that shot in the arm. Real estate, mortgage, title, insurance is such a driver in the economy, and the Biden administration and the feckless leadership has just put that on almost a severe halt. Can you imagine selling real estate in another state, being in another state, especially one of the blue states where people are leaving in record numbers versus, here we are in Florida, competing in that sense. I got to play this clip here. It was very interesting about the financial firms that are leaving New York City.
Here to discuss the implications of this draining of the financial sector is Daily Wire contributor David Marcus. Morning, Dave. Do we know what's driving these moves away from America's financial center?
Morning. And where do I start? Taxes in Gotham are high. The cost of living is exorbitant. Crime is rampant. There's a migrant crisis, a homeless crisis, a drug crisis. And the cumulative effects have just made New York an unattractive place to do business. And you mentioned the lockdowns. During COVID, a lot of companies, especially white-collar companies, found out that they can really do business from anywhere. So why not pick up and move to a place where your employees feel wealthier and safer? That's exactly what 158 big firms did, taking $1 trillion out of the city's economy and potentially billions in tax revenue.
158 big firms. That's big
Yeah,
numbers,
that's
man.
huge.
$1 trillion.
It's funny. We always, California always comes to mind when we have the discussion of mass exodus, but California is unique. California's got amazing landscape and just an incredible part of the country.
Paradise.
So, exactly. So
weather-wise.
Correct, right. But so politically and economically, it can maybe not do everything perfect and still get away with it. New York's in a totally different situation. People are looking for reasons to get out of New York sometimes. So you keep giving them, whether it's taxes or crime or any of these other reasons, and there you have it.
Yeah, exactly. There's so many things to look at, and the fact is, when people vote with their feet and they vote with their dollars, and in this case, the people have spoken. Florida's number one net in migration, 319,000 net in migration, not only from a great job by Governor DeSantis keeping us free, keeping it open. Yes, we have our challenges too, insurances, of course, storms, things of that nature. But all in all, when you look at which state in the union, number one in the country now, dead last, you hit it. It was California. Net out migration, people fleeing. I believe the number is like 457,000, and I don't think that's an accurate number because it's probably offset by some of the illegals that they allowed in as well. So you look at the numbers, and that's another thing too, Tom. If you look at the trust in government, trust in these different bureau, labor statistics, unemployment statistics, you really, a lot of people, the trust in government is at record lows right now too.
Yeah, all those polling numbers are saying that. And then we have a whole year of political ads we're going to have to listen to in debates. And I don't know. I'm not really enthusiastic. I mean, I'm definitely interested. I want to stay educated and engaged with the process. But I don't know. Thus far, I'm not too impressed with anybody that's going to get up there and speak. But hopefully someone surprises me.
Yeah, we'll see. It's that whole side of the deal is just so it's sickening, to see our country indicting a former president 4 times on these trumped up charges, ridiculous, scenarios that are playing out. That they're that scared of the guy. They're that scared.
It's interesting when you talk about Florida always being at the top. The longer I'm here, I kind of start to take that for granted, and I have to remind myself, they're building like crazy around Tampa, Sarasota, Fort Myers. I mean, really the whole Orlando. For a reason. So whenever I think like, gosh, when is too much building? Are we starting to see that? Is there too much construction? But then I don't, all these people in these jobs, they need a place to go. So I guess they're gonna, they wouldn't build it if they didn't know they were coming.
Yeah, I mean that's true, and we still have low inventory, record low inventory still. It's around 1.5 months supply of inventory. The absorption rate's in the 80% range, and the challenge there is also, yes, we need to build more homes. We need more affordable homes. We know that. Yep. So it's kind of like, what's the problem? Is it the approval process in the counties, the building sector, the risk, the willingness to take risk? Because by the time you start a project, you're looking at at least 1.5 years till that big major project's done.
Yeah. So the numbers I'm seeing, so builder confidence is it had slowed. Now it's picked back up, and I think people are kind of comfortable with where the economy is. The biggest challenge I'm hearing is still labor. Yeah. It was supply. It was the whole COVID and just the supply chain issues. But now I think it's the number one issue is employment, getting laborers and people out there. And the people building these houses, it's not what it used to be. It's not all a bunch of 25-year-old males building these houses. And it used to be occasionally you'd see some females on the work site, maybe cleaning, picking up. Some of them, they're slinging hammers. They got saws out. They're up on roofs. Yeah. So it's like, it's hard to believe. Now, I'm not saying I want to be building a house when it's 100 degrees.
It's hard work.
It is hard work. So they deserve every dollar they're making. But, if somebody wants some good money in an instant career, that's one that they could jump right into.
Yeah, and you look at, what are the factors behind that? I think if you start looking at the factors, as a government, we're paying a lot of people to stay at home. That Rich Men North of Richmond song came out, right? The Oliver Anthony song you probably heard or seen it through the grapevine. But, he strikes a chord with that. He says something to the effect that, people are abusing the welfare system. People are, and especially when you have these pandemics and these government events, these people come out and oh well, we need more of this. So we're printing more money. We're subsidizing people to stay home. So that of course, the labor force is going to suffer.
Yeah, and unfortunately, that was like many things that start off with good intentions. It just spun out of control. I get it. You had this pandemic and people lost income and they had to find a way to pay their bills. But I think it stayed too long. And then the people that got back to work that wanted that saw their friends and family and other people that were just staying at home. And all of a sudden they started thinking, well, gosh, why am I working so hard when I can stay at home and make nearly the same amount of money?
Yeah.
And then it just kind of snowballs. Kind of reminds me of like 15 years ago when people were walking away from their homes. And that kind of became socially accepted.
Right.
And even though to you and I, in
our
circle of people, you frown upon people that aren't working and just doing stuff, but there's a whole different, population out there that almost looks the opposite. Like, oh, you're a sucker. Why you chasing a dollar? You can just, wait around. It's coming to you, anyways through one of these programs. So I don't know. Yeah,
exactly. But you bring up a good point, though. The 2008 meltdown. Think about that. I believe that was an orchestrated government meltdown, mortgage note meltdown. They knew it was going to happen, and they kept doing it. The subprime, this lending, and then you get irrational exuberance. But my point is, ultimately, the powers that be, the wealthy, the elite, said, hey, this is a great opportunity for us to foreclose a bunch of people, come in, buy the inventory at 20, 30 cents on the dollar, and that's exactly what happened. Fast forward 20 years or so. Here you go. Now you got a pandemic. A lot of people, you got the BLM riots. A lot of people are burning down buildings. So the elites, they know what they're doing. It's a game of chess. They're looking at ways that they can buy assets on the cheap, and they've done it multiple times, and they continue to do it.
Yeah.
In a lot of different areas.
Yeah, for sure.
But when it comes to the local side, when you're looking at back to Tampa, St. Pete, Clearwater, Bradenton, Sarasota, I mean these awesome areas to live. A lot of people are moving north too. They're moving up to those Pasco, those Hernando, Weeki Wachee, some of these different areas. Airbnb is still on the scene. I've seen a little bit of a slowdown in terms of these Airbnb short-term rentals, let's call them, because of people kind of seeing diminishing returns. I think it may be hitting a point where it's saturated. Yeah,
for sure. Well, I think that it became a lot pricier when the consumer had to start paying the taxes that the hotels had to charge. That definitely kind of changed it. And then, yes, I think too many people were buying these properties just thinking they were going to put them on Airbnb. And, all these sites, you have to be really, really careful. If you're buying an investment property with that being your plan, you have to be really aware of what some of those cancellation policies are. So some people, they had their Airbnbs registered or booked out months in advance, and then, take the storm for granted, or as an example, a week before they were supposed to come into town, they cancel it because they know there's a hurricane. I don't blame them, but that landlord, got stuck without that income coming in.
Yeah.
So I think there's just lots of reasons that's shifting, and you're starting to see more people believe in kind of the long-term rental. Hey, get a good tenant in there that is going to take care of my property, and that's how I've always done. I have a few that I do short-term rentals, but short-term is maybe 3 or 4 months.
Yeah.
So at least, you don't have the same wear and tear back and forth. And I try to do it through, Facebook, personal friends, past tenants, things like that. So it's a little bit easier to manage, but
yeah. Yeah, and that's a good point, because a lot of people do look for those investments, and then you've got the appreciation over the long term. You've got some of the tax benefits, and I think it's a little bit the scenery's changed definitely from 2 years ago, 3 years ago to now. Let's take a quick break there. More with Tom Rydberg, DK mortgage expert contributor on the Consumer Quarterback Show. Support the local economy, not the big banks, not the folks that took the bailout money. Support Tom Rydberg, DK Mortgage, and the local lenders here in Tampa Bay that we work with the Consumer Quarterback Show and the Platinum MVP team at Keller Williams Realty. Kevin Sorbo comments on the importance of fathers in the household, and also, the recent attacks and ongoing attacks on the patriarchy. We're going to discuss that as well coming up here on the Consumer Quarterback Show. Check us out online, consumerqb.com.
Hey, I'm Ken Shamrock, and you're here with Consumer Quarterback Show. And I say, Brandon Rhymes, knock out your competition.
All right, we're back. Brandon Rhymes here. Tom Rydberg in the house, Consumer Quarterback Show. Platinum MVP team, Keller Williams Realty, Replenish IV Solutions as well, longtime friends of the program. Check out Stephen and Lisa Gunnan, replenishivsolutions.com. Let them know the Real Estate Quarterback sent you. Get that vitamin infusion drip and boost that immunity because they're bringing the election year COVID variant back. You got to be real scared. Yeah, you guys. All right, Tom, we're going to jump into some more content. We're going to talk about the DSCR ratio, debt service coverage ratios, and some of these investor loan opportunities with Tom coming up here in just a moment. Hot property, 861 Mandalay Avenue. This is on Clearwater Beach, north side of the beach. Beautiful property, 2-bedroom, 2-bath. 200 steps from the sugar sand beaches, dolphin-filled waters of beautiful Gulf of Mexico, Clearwater Beach. 861 Mandalay Avenue, open floor plan, sleek quartz countertops, gorgeous stainless steel appliances, charming pergola, 900 square foot screened-in patio as well. Also got another one on Monterey Avenue. I really love this property at 605 Monterey Avenue. This is a Clearwater home. It's kind of a cul-de-sac street. You got no neighbors. On one side, you're at the end of the street, and this is a beautiful home. Open floor plan, pool, screened-in lanai. You got just a nice floor plan as well. Beautiful floor plan, updated kitchen, stainless steel appliances, and a really unique circular driveway with a large courtyard in the front. 3 bedrooms, 2-bath, 2163 square feet, non-flood zone home at Monterey Avenue. You can see all of our listings online, platinumcoastalelite.com.
This is God's country.
All right, Tom. Wanted to get in that debt ratio loans because these are interesting because the home or the rental pays for itself in a sense, right?
Yeah, it does. So you can always tell which programs investors are having success with. They're not losing money. Bank statement programs, low credit scores, things like that will come and go. But this debt service program is really catching on, and more investors are coming out with it, and they're getting more competitive with their rates because they work. You have to be an investor. It can't be owner occupied. And, as an investor, you kind of want a 1.25 is considered a good rate where you have a little bit of fluff after you pay all of your expenses. But some of these programs will go as even below 1%. Now, obviously, you got to be a little careful if you're investing in real estate and it's not generating enough income to pay for the loan. But in some cases, it still makes sense, right? They're getting at a good purchase or they're looking at future appreciation. But there are probably 4 or 5 investors we work with, one in particular that just kills this program. You can do it with, 20% down, in some cases less. Rate is not that god-awful compared to what just a standard, Fannie Mae investor program is. Mm-hmm. And one of the big challenges for a lot of these investors was they dealt with the Airbnb and the short-term rental. So it's hard to be able to show the income that justified the price, but now they have the ability to look at short-term rental income for qualifying. So that's been a game changer. So yeah, any investors out there, it helps if you have a little bit of experience, but even if you're a first-time investor, there may be an option for you. And a lot of international buyers, foreign nationals who can't buy an owner-occupied property, they want a second home / investment. That's an easier way for them to get into a property than traditional foreign national programs.
Yeah, I think it's a great program. I think it's a great idea too. If you put 20% down, you're limiting the risk for the investor. Yeah. And on the buy side, you're leveraging cash flow. Still, you have an opportunity to have a passive investment. This was a story that I saw recently. I wanted to mention too, since we're talking with Tom Rydberg, our mortgage expert contributor, S&P Global Rating. So S&P downgrades U.S. banks. So another group of banks have been downgraded. 5 U.S. banks downgraded here. Higher interest rates affect the funding and liquidity for many lenders, it said, with consumers and businesses now able to earn higher returns elsewhere. The downgraded banks include Key Corp, Commercia, Comerica, Valley National Bank Corp, UNB Financial, and Associated Bank Corp. Just 2 weeks after Moody's Investors Service rattled markets by lowering its credit ratings for several banks. So there is some type of a contraction happening out there. There's challenges in the market. And talk to a little bit about some of your lenders as well that you work with, because I think that's a unique advantage you have. You can shop for the end user.
Yeah, we have a variety. I don't want to scare anybody out there, but you do have to be a little careful of who you're working with, because you're starting to see a few examples where banks are getting sold or going out of business, discontinuing programs with very little notice. And as a consumer, you wouldn't know the difference just by looking at them. So go with somebody that has the advantage we have is, God forbid, we do have an investor or program that, gets eliminated a week or a couple days before closing. We have other outlets for those clients. I know a firm I used to work for years ago, they just got bought out by another company. That wasn't like a negative situation, but it just shows some of the consolidation and some of the moving parts that are going on right now.
Yeah. Yeah, exactly. And I think a lot of that points to the commercial side of things as well. If you look at the commercial industry or loans that are out there, a lot of times traditionally commercial big banks or other firms, even pension funds, will be holding a certain amount of around 40% of their portfolio. Their overall portfolio is commercial loans, and a lot of times they try to just restructure them based on, hey, after a couple years, 5 years, we'll refinance it. Now you can't refinance those because of the bonds and the situation there.
Well, and that debt service we're talking about, now those numbers don't work for those institutions.
Right.
And it's really like, I won't pretend to understand all the banking regulations, but there's definitely a lot of those parts are intermingled, meaning that your deposits are down, there's less loan you can give out, there's less risk you can take, and as much as they may have a client they've been working with for decades, the timing is such that it's no longer in their best interest to keep that commercial loan. So I think you're going to continue to hear rumblings and stories about that in the next year or so.
And the velocity of money, too, is another term. You won't hear it, but it's turnover. The more I can turn that dollar over, lend it out as much as I can, that's what they call the velocity of money. Tom, that's almost our time here.
Right.
Close faster at Gmail?
Yeah.
Closefaster@gmail.com. That's a direct email.
Direct email, loansearch123.com. If people want to check it out online, you can apply online, get a pre-approval, run different loan scenarios with our mortgage calculator. So lots of options.
Kevin Sorbo comments on the importance of fathers in the household coming up. We'll talk with him. Also, Sean Fabre, didn't talk with Sorbo. He's going to be a clip, actually. So Sean Fabre, we're going to have him comment on that. Fabre Frameworks here on the Consumer Quarterback Show. Tom, thanks again, man. Good stuff.
Seeing you.
Always great content with Tom Rydberg, DK Mortgage, on the Consumer Quarterback Show. Make sure you follow us online. We'd love to connect at Brandon Rhymes 1 at CQB Show, and subscribe to our YouTube channel, Brandon Rhymes Realty. We'll be right back here on the Consumer Quarterback Show, consumerqb.com.
Hey everybody, it's the Captain, Matt Bruce, and you're listening to my buddy Brandon Rhymes, a Consumer Quarterback. Sell, Brandon, sell.